of the live market open for Friday, November 20th. We had quite a lot of action in markets, the US dollar weakening and then strengthening once again. Reaction to the Fed minutes that didn't provide anything new, some profit taking, and perhaps the markets are looking beyond a rate hike in December 2015 and thinking about only weak rate hikes, gradual rate hikes in 2016. That means they're beginning to listen to the Fed, but it more seems like profit taking to me. In addition, we had retail sales from the UK coming out below expectations, hurting the pound just a bit. The ECB added hints about action in December also now. Jobless claims came out as expected. Philly Fed was okay. And Fisher didn't say anything new. Basically, rates will rise. And in Australia, the RBA seems okay with a weaker Australian dollar. This morning, we have Mario Draghi speaking. He is repeating the same stance that we had in recent speeches in the ECB decision, basically ready to act, must fight low inflation, worried about core inflation, worried about global growth. The economy needs more aid if it's not self-sustaining. Not saying anything really new, but lots of determination to act in December, including cutting the negative deposit rates to lower ground, hurting the euro. The euro did a round trip. Now it's already down on the week once again. Levels to watch on euro dollar. On the downside, 106.30, which saw only a false break, and then 105.30. On the top side, 107.10 and 107.60, and then 108.30. Okay, pound dollar is back to the previous range. Still a relatively high range, 152.50 to 153. Next resistance, 153.70. Next support, 152 and 151.60. Dollar yen, this weakening of the US dollar, weakened dollar yen below 123. Support at 122.70. Resistance, strong resistance at 123.60. Canadian dollar today is expecting big events, retail sales and CPI at the same time. Currently 133.30, top side 133.70 and 134.60, and the downside 132.80 and stronger support at 132.40. Aussie dollar just around 72, resistance at 72.20, support 71.50 and 70.65, high resistance at 72.80. Kiwi dollar 65.63 at the moment, struggling with the 65.70 line, resistance 66.15, support 65 and 64.50. Okay, what else do we have today? We mentioned the Canadian figures. UK has the public sector net borrowing, not a big event. Eurozone consumer confidence at 3, and the last word from central banks comes from Bill Dudley, number 3 at the Fed at 4:15 GMT. And the big influencer is, of course, Mario Draghi, which is talking now about downside risks that they have increased, basically repeating the same stuff. Basically, what we know from the ECB is that they're about to act. We need some material improvement, some miracle for them not to act. Regarding the Eurozone, we'll hear more data next week. So here, this is the preview for next week, the week beginning on November 23rd. So on Monday, we have Eurozone PMIs. The big focus there is German manufacturing, the only country that really manufactures a lot and the continent's largest economy. Important, especially in the context of the VW crisis. Existing home sales also of importance for the United States. On Tuesday, we have busier day. German IFO survey, more important than ZOO, sort of completes the picture for November regarding German's business sentiment, and US GDP. In the second release, there are always significant revisions, so this is important to watch, and also consumer confidence. Wednesday, we have, because of the Thanksgiving vacation in the United States on Thursday, we have lots of figures crammed on Wednesday. Durable goods order is important for investment for the long term for the Fed. Another Fed figure is the core PCE price index, 1.3 year over year, and let's see if it ticks down or up or stays the same. I don't know where it'll go, but this is the key inflation figure for the Fed. Employment, the first mandate is good, but the second one, inflation, not so. And we also have jobless claims, so we have both mandates of the Fed at the same time. Thursday is quite light in events. Markets are open. Low liquidity means long hours of boredom, but then the markets can move quickly because of some small order. On Friday, we have a bit more liquidity. Officially, it's not a vacation in the United States. Many traders are still on vacation. And then we have UK GDP to close the week, among other events. Of course, these are the top events next week. We also have others. We will cover them every day. We'll be here next week, every day as usual. So that's the preview for next week after the wrap for this, for today.